Welcome back to Explain the Charts, everyone. Today, September 25th, 2025, we're taking an in-depth look at Ethereum, ticker ETHUSD, to understand where the market stands and what we can expect going forward. The crypto space has been buzzing with news, and Ethereum is certainly at the center of much of it. Just a few days ago, on September 22nd, Ethereum experienced a notable downturn, dropping around 5.55% according to our daily chart data, which aligns with reports of a broader crypto slump. The Motley Fool highlighted a 6.8% drop for ETH on that Monday, attributing it to investors taking profits after the Federal Reserve's announcement of lower interest rates, the first cut since December 2024. This suggests that the macroeconomic environment is having a direct, albeit sometimes counterintuitive, impact on crypto market behavior, as rate cuts prompted profit-taking on previous gains. Despite this recent dip, it's important to remember the bigger picture. Ethereum is still up a remarkable 88% over the last year, showcasing its strong long-term investment appeal. Looking at our daily chart, we can clearly see the impressive run-up that ETHUSD has had since May 2024, highlighting this significant annual gain. The news also points to strong institutional demand for Ethereum, with ETFs like the iShares Ethereum Trust experiencing robust inflows, contrasting with weaker retail flows. This institutional interest is a key bullish signal, suggesting underlying strength even amidst short-term volatility. Let's zoom in on the September 22nd candle at timestamp 1758499200000, which confirms the significant daily drop. We can see a high of 4,462.2 and a close of 4,205.3, with a large red body indicating strong selling pressure throughout the day. However, prior to this, we saw ETHUSD trading significantly higher, reaching highs of nearly $4,900 on August 24, 2025, from an open around $4,784, and even touching $4,889 on August 22nd. This recent high of nearly $4,900 represents a strong resistance level that bulls will need to overcome. The news mentioned an analyst stating ETH must reclaim $4,580 to trigger a potential breakout, putting our current price well below this critical threshold. This $4,580 level now acts as a key short-term resistance, and a break above it with conviction would signal renewed bullish momentum. Looking further back, we can identify historical support around the $4,000 level, which could be tested if the current downward pressure continues. The market also saw over $1.8 billion in long liquidations recently, which contributed to the sharp sell-off. This liquidation event is evident in the large volume spikes we've observed in the daily chart during significant price drops, for example, on February 3, 2025, where the volume soared to over 1 million, and the price saw a dramatic swing from $2,883 down to $2,100 before recovering somewhat. Another massive volume day was August 5, 2024, with over 870,000 in volume, when the price fell from $2,687 to $2,420. These extreme volume spikes during sharp declines are classic signs of liquidation cascades amplifying price movements. Switching to the 1-hour chart, let's examine the more immediate aftermath of the September 22nd drop. We can see that after the initial sharp decline on September 22nd, ETHUSD has been attempting to stabilize, trading largely sideways. The price found initial support around $4,056 and has since been consolidating in a range between approximately $4,100 and $4,200. The constant back and forth between short-term highs and lows indicates indecision in the market, with neither buyers nor sellers currently in firm control. The hourly chart reveals a series of smaller candles with fluctuating volumes, suggesting a lack of strong directional momentum in the very short term. Now, let's zoom in even closer to the 15-minute chart to get a granular view of the past 24 hours. This time frame shows the delicate balance of power, with prices currently hovering around the $4,150 to $4,170 mark as of September 25, 2025. 137 Universal Time Coordinated. We can see repeated attempts to push higher met with selling pressure, forming small wicks at the top of candles, indicating resistance at these intraday levels. Conversely, buying interest seems to emerge whenever prices dip toward the $4,130 to $4,150 region, forming lower wicks, suggesting a minor support area in this tight range. The overall volume on this 15-minute chart has decreased since the intense selling on September 22nd, which is typical for a period of consolidation. From a bullish perspective, the long-term outlook for Ethereum remains strong, underpinned by consistent institutional demand and the prediction of a supercycle by major players like Bitmain. The fact that Ether is clinging to a key trendline support, which historically precedes rallies of 90% to 125%, is a highly positive indicator for the long term. If this support holds, we could see a significant rebound in the coming months. For the short term, breaking above the $4,580 resistance, as identified by analysts, would be a strong bullish catalyst, potentially leading to a retest of the all-time highs near $4,900. Conversely, a bearish scenario could unfold if the current support levels around $4,000 are broken. The news mentioned Bitcoin potentially dipping to $103,000, and such a move would likely drag Ethereum lower, possibly towards deeper support levels formed during earlier consolidation periods, perhaps even revisiting the $3,500 to $3,600 range seen earlier in the year. The recent negative funding rates mentioned in the news could indicate an oversold market, sometimes preceding a short squeeze, but it also reflects a bearish sentiment among derivatives traders. To recap our key price levels, immediate support is around $4,130 to $4,150, followed by stronger support at $4,000. On the upside, immediate resistance is near $4,200, with a more significant short-term resistance at $4,580 and the all-time high around $4,900. The likelihood of a short-term rebound to retest $4,200 is moderate, reinforced if buying volume increases on the 15-minute chart and Bitcoin shows stability. A breakout above $4,580 is less likely in the immediate future without a strong catalyst, but if sustained institutional inflows continue and market sentiment improves, this becomes more probable. Conversely, a break below $4,000 would signal further downside, potentially initiating a cascade of selling to test lower supports. Traders should closely monitor overall crypto market sentiment, especially Bitcoin's price action, given its correlation with Ethereum. Also, keep an eye on federal interest rate announcements and institutional ETF inflow reports for future directional cues, as these have proven to be significant drivers.